welcome back to our Morning Kappa at 8. I'm Joseph here. So looking at the Hang Seng Index, I can see that yesterday, right, sentiment have turned negative on the index, experienced a very strong selling pressure. Um, so the 20 days moving average remains as the overhead resistance. Based on this renewed selling pressure, the index are likely to pull back towards the 25,000 point level. Okay, and we see that yesterday, like most of the big cap have experienced a very strong selling pressure, except China Hongqiao, right? The 1208, right? 9963. These are some of the few counters that are bucking the trend. But looking at the tech stocks and the insurance company, as well as the some of the bank stocks, also experience a different degree of corrections yesterday, right? So if you are looking at the Hong Kong market right now, just to be a bit cautious, looking at your stocks, should it breaks the support level, then you have to uh, pare down the positions. Otherwise, we can actually wait for the corrections to complete somewhere at 25,000 point, then we re-entry near the support level. Okay, and as of the US market, right, sentiment remains bullish. I can see that yesterday is about testing the 6850, this resistance level. Despite that, over the 1 week, quite a lot of investors was asking whether the US market is expensive, overheated. Is it the AI story is going to be over, right? But you look at the price actions over the 1 week, right? Sentiments remains bullish, right? If you cross-check S&P 500 against other indicators such as the expectations of the interest rate, uh, it does not change greatly. Either there will be a one cut or no cut. This coming December, right? The GDP expectations remain strong. Of course, this December, the FOMC is going to have their latest forecast again for next year GDP, right? But so far, things looks uh, positive on the US market, and we look at another indicator, which is the US dollar and also the money market funds interest rate, right? There's a bit of volatility, right? And certain stock have actually pulled back from their historical high, right? But you look at S&P, which track the 500 counters, the top 500 counters in the US, right? The price action shows that it's too early to call for a reversal, right? So so for our side, right, I will still see that the this 6,003, right, remains a very strong support level, which is the low point of the August month. So as long as stay below this level, right, overall technical setup remains bullish. As saw yesterday, the Tesla, right, have boosted the market higher, and we also see that Palantir, right, one of the counter that have been talked quite a lot, especially one of the big shark, Michael Burry have openly mentioned that he have put options on Palantir. The stock did went down after the X posting, but as of yesterday, you can see that the stock have rebounded strongly from the interim low. I think that the sentiment remains positive on the Palantir. And you look at another counters, which is Oracle, right? That this counter that garnered market attention recently because the CDS have actually went up. Investor communities worried about the ability to pay back the debt. And but look at the Oracle for the past 1 week, it also managed to bounce off from their this recent money low. All this sign shows that the market remains resilient. Now, another thing that we observe is that the Bitcoin have actually experienced a very sharp corrections recently that impact a few counters that related on the Bitcoin, right? But you look at the equities market, right? Damage is not that great on the equities market. In fact, um, things still looks good after the latest November earnings results. So this coming week, this coming month, right, we're going to have another quarterly results from Oracle, right? We shall see what happened after they announced their result and what's their outlook for this coming quarter, right? Overall, we'll stick to a bullish bias on the US market. And as for our E-mini Dow futures report, we'll still keep a bullish bias. As for the commodity side, you can see that the WTI crude has been steadily moved downwards. One of the key point that just to recap is that some time ago, I think about 3 weeks ago, right, OPEC have changed their guidance. They have mentioned that they see the 2026 market to be somewhat balanced in terms of demand and supply. Now, previously, they are seeing the supply deficit. That's why the Saudi is going to increase their productions in the 2026. But then on, Saudi have actually dialed back on their aggressive of productions. They're just going to supply just nice to the market. And as such, the overall community thinks that the market is going to be uh, um, demand and supply are going to be matched. And hence, one thing that we do see recently is that the volume of productions has been steadily coming down in the overall market, right? And as such, if you look at the WTI crude, it has been trading below the 50 days moving average. Also has been well below the 200 days long-term moving average line. And right now, I think one of the story on the oil market is whether there will be a peace deal between Russia and Ukraine. And of course, yesterday, Putin has mentioned again that he will not sit there should the European continue to support the Ukraine. Now, all these wordings have give the market a little bit of worried, and that's where the oil have actually went up. But eventually, you look at um, the shadow here, right? It shows that the bear still have the technical advantage as of yesterday, right? So overall setup remains bearish so far on the WTI crude. We stay on the bearish side with our stop loss at $65 per barrel. And then on the gold has been steadily moving upwards. And there's a mild pullback yesterday, right, after the breakout on the 4,002. But as of now, the gold still stay above the 4,002. Now, should the momentum continue, it will climb towards 4,004 and 4,005. Now, gold have another there's another commodity which is silver. And beginning of the week, right, we start to observe that silver experience a very crucial shortages on the inventory, especially on the China side as well as the US side. Right, a very strong demand have emerged at the UK London market, right, and that's where have seeing some short squeeze on the silver product. That's why the silver have actually went up over the week. And as such, the gold is playing a catch up with the silver. It have actually went up for the past 1 week as well. Um, so as of now here, I think one of the event that may impact the gold would be this coming Friday, the non-farm payroll data, right? But as of yesterday night, we do see that the ADP, the private payroll, show that a little bit of a higher unemployment rate, right? But we shall see what happened after the non-farm payroll have been released, whether that will affect the Fed decisions. But overall, if you look at the some of the advanced indicator that I showed you yesterday on the bond real yield rate, now overall the bond real yield rate has been moving downwards, and that have actually encouraged the gold price to move on the upwards. Hence, I think that as long as the gold stay above 3,008, we should keep bullish bias on the gold. Right, so for the FKRI, we continue to stick to bullish bias, and we have moved up our stop loss point from 1570 to 1600. Now, just to recap, last Friday was the month-end closing and also the month-end rebalancing by the fund managers. And after that, we do see that on the Monday, the FKRI initially opened lower, but then on it closed higher, thanks to the very strong positive bullish movement from the bank sector. And we have been waiting these banks to lead the market for the past 2 months, and eventually banks have finally wake up after the quarterly results. And I think the momentum should continue at least until the December, and usually December month is a positive month, and that may overflow to the month of January, and then on February we're going to have the December results, and usually um, most of the company will declare their final dividends in their quarter 4 results. So I think that if this quarter nothing much change, right, we should see a little bit of upside on the FKRI likelihood. It may break past the 1650, followed by 1675, tracking their peers like the US market. Okay, on the FCPO, right after the um, market surveyor have published the survey yesterday, it shows that numbers suggest that the FCPO still remains challenged on the inventory level. Right, although the production starts actually come down, but the export market have not picked up as fast as expected, right? As of that, yesterday, right, traders was taking profits, right? We shall see that what's the follow through price actions from today until the 10th of the month, right? And as of now, the resistance remain at 4250, coupled with the downtrending 200 days. So in the mid to long term, right, I will still keep a bearish trading bias. Now, for the immediate term, clearly the 4000 have become the immediate support, and followed by a 3850, the lower support level. Okay. And as of the trading stocks this morning, firstly, we'll be looking at E&O, right? E&O have jumped above 71 cents resistance, and is eyeing to test the R1 at 75 and followed by 78, and downside support is 68 cents. Secondly, we have Kobe Technology. After their results, their sentiment has been very positive. It has a breakout from 1 ringgit and 72 cents yesterday on the back of high volume. Riding on this momentum, Kobe will be testing R1 at 1 ringgit 85 and followed by R2 1 ringgit 95. Downside support is at 1 ringgit and 58 cents. So we have two breakout stocks this morning, E&O and followed by Kobe. So I'll stop here and pass on to Adam on the construction sector update. Thank you.
Okay, good morning, everyone. Yeah, sorry, I think there was some issues with my internet, but okay, so today we have a construction sector results wrap. So for the third quarter of 2025, the construction sector saw two counters that exceeded expectations. One met expectations, while another seven underperformed our estimates. And the ones that exceeded expectations were the key counters such as Kejaya Prospect and also Sunway Construction. And if we were to look at in terms of how the construction revenue has fared on a quarterly basis, from the latest quarter, we saw that contractors booked in higher revenue on the back of higher progress, and this actually ties back to the data by the Department of Statistics of Malaysia, which revealed that the value of construction work done in the third quarter of this year reached another record high of about 45 billion ringgit. And moving forward, if you were to look in terms of in terms of anticipated jobs in the very near or medium term, we've got the systems package for Penang LRT that could likely be known or awarded. It was supposed to be by the end of this year, or if not by the end of this year, it could be early of next year. That's about 3 to 4 billion ringgit. And not to forget the segment 2 of Penang LRT, which is the bridge which connects Komta to Penang Central. That is about 5 to 6 billion ringgit. Tenders have just been advertised in October of this year. Deadline for the tender is April next year. So we could see any potential awards from the second segment of Penang LRT to be perhaps after first half of 2026. And not to forget, you've got the Johor Bahru ART that is currently at the cabinet level, and perhaps we could see any potential awards next year. That's about 6 to 7 billion ringgit. But moving on to the data center side of things, we still think that Malaysia has a lot of potential of data centers to come into the country, given that, for example, Microsoft just launched its Southeast Asia Region 3 down in Johor. And recall that Microsoft has been buying plots of land in the past 2 years. They've got about 5 plots of land, which totals up to about 370 acres based on our estimates that could house to about 1 gigawatt worth of potential DCs, and 1 gigawatt of potential DCs can bring about to maybe around 20 billion worth of potential construction values. So, that the DC space continues to remain relevant for the construction space in Malaysia. Topics wise, we continue to like Gamuda, given that it has a very diversified base across various geographies, not just in Malaysia, but also in Taiwan, Singapore, and Australia. And for example, in Australia itself, it has a potential more than 10 billion Aussie dollars of job pipelines, especially from the renewable energy space. So we also continue to like Suncon, given that it is one of the key data center contractors in Malaysia. And lastly, we also favor Kejaya Prospect, given that it is having a steady flow of jobs coming from the ENO Andaman Island. And not to forget, it has been gradually increasing its land bank across Klang Valley and also Penang, which should continue to contribute to its property development arm in the coming years. So that's all from me, everyone. Thank you for dialing into RGB Morning Kappa at 8. We will see you tomorrow again at the same time and same place. Thank you and have a great trading day. Bye-bye.